Review, excuse me. Let's start out by just seeing where we closed for the week. Let's take a look at the grains. Corn, strong week for corn. We closed at 341, almost up 13 cents on the week in the December contract. Soybeans, a stronger close as well, up almost 28 cents in the November contract. We settled it at $9.80. December wheat up 4 cents, a little over 4 cents on the week at 403 and a quarter. The final settlement. Livestock futures, October cattle closed up $2.80 at 104.40, and October hogs closed $1.52 lower at 59.22 was the settlement price there. Still trading as we speak. Oil looks to close about $1.80 higher on the week, somewhere right around that $46 level, and the dollar looks a little weaker. Still trading as we speak as well there. 50 points lower at 95.34 on the week. The grain markets this week, a shortened week, holiday weekend. We did see some strength come in the market. We did see open interest decline in corn. We had commitment to traders report out this afternoon, and it showed that corn actually added to their short position. This was through Tuesday of this week, but they're holding roughly, the managed money is holding roughly 180,000 short corn positions. We know we've seen some short covering this week with open interest down this week, so I think we covered roughly around 25,000 of those contracts this week. In beans, we actually covered some of the longs on beans, so we did see some short covering in beans actually, where we whacked about 16,000 contracts or so off that managed money fund long on beans. I think the main driver this week was pre-positioning ahead of the report. Monday's report is our monthly supply and demand report, and all eyes are going to be on the yield numbers and what will that do to carry out. Going into that report, the corn yield, the general consensus is that we're going to see a whack in the yield per acre. Last month, if you remember, in the August, we were at 175.1. We're looking at a 173.4 yield. And the idea there is we could cut that new crop ending stocks down from that 2.4 billion down to around 2.33 billion bushels. Now, not many are expecting any adjustments or changes in the 2015-16 ending stocks number, as we did wrap up the year there. We're looking to hold that right around that 1.7 billion bushel carryout mark, carryover into this year. Again, the trade is expecting a yield cut into that report, so we may have to see a real bullish surprise or a major yield cut in corn to get a little bit more traction in this corn market, as we are trading up near the highs of the recent range, and that would be that 345 area, 315 to 345. It's a range we've been in for a couple months. Close above 345, we could see a little bit more of a technical buy in the contracts or in that corn market. See a little more short covering taking place. It's hard to get explosive, I think, though, as we move forward over the next month in the beginning of harvest. Harvest for most of the Corn Belt has yet to start. We are hearing a little bit of corn being picked in the southern fringes of the grain belt as we speak. Over in soybeans, again, all eyes will be on the yield. The trade going into this report is expecting a bump up in yield. Our August yield estimate was last month was 48.9 bushels an acre. We're looking for a little bump up of 49.2 is the average trade guess. Talk of 50 bushel beans out there as well. But as we wrap up the ending stocks for 2015 and 16, we're currently at a 255. The trade's looking for a cut down to 232. And really, what the inspections report told us is that we may see a further cut down there, another closer to 200 million bushel carryout, because we did see a huge export sales program to wrap up the month of August. So the export sales number tells us that there should be a further cut in that beans. I think the real number is actually closer to that 200 million bushel mark in the ending stocks number for old crop beans. So the question moving forward is, what are we going to do with the new crop carryout number? Will yield make up for that 60 bushel cut in old crop stocks? If we increase yield 0.7 bushels, that will offset the cut in export demand. Historically, we don't see a very large movement in this report, or yield-wise that is, and the trade puts a little bit more or a much larger emphasis on the October report. But again, that'll be the driving force to start next week. When you look at November beans, we're in a trading range as well, anywhere from that 945 to 1020. A move and a close outside those parameters probably is going to gain some momentum in either some technical buying and or technical selling. Export sales for the week were very good again for corn. It's the first one of the year, of the new marketing 16-17 year. They were good for corn and wheat, and they were exceptional for soybeans. So we still have a very strong demand program in place. Again, it's all going to be all about supply. Next Monday, we'll have those numbers, and then we'll start looking forward to demand to see if we're going to still see that Chinese demand come in and continue to buy. Interesting enough, though, that the previous 3 months, Chinese soybean imports have actually been less than last year at this time. Something to keep in the back of your mind, and that's primarily due to South America's crop turning out not to be as large as anticipated. Taking a look over at the livestock markets, cattle futures did make contract lows in the October contract this week, but we did close very solidly. We actually went 4 days in a row with a higher high and a higher low. Many been trying to capture the bottom end of this market. We were down 17 to 19 days coming into this week, and or on Monday of this week or Tuesday of this week. We did finally see a little bit of bounce in the futures market. Cash weaker again. Cash for the most part looks to have traded in a 105, 106 range in the south. Corn Belt's 164, 168, 104 to 106 in the Corn Belt for the most part as well. So we do have that the October contract coming in line with the cash. We'll keep an eye on the cutouts next week to see if that'll give us any hint, but it seems as of late the futures contract is driving cash more so than the other way around. Taking a look at the hog market, still in that range-bound trade. 58 in the October contract continues to be a major area of support from a technical perspective. 58 to 64 is where we've traded here over the past month and a half. In the October hogs, I would suspect if you were to break outside of those parameters, you'd have some technical buying or selling against that as well. We know we got a very large fourth quarter production coming online as far as pork production. We need to see that export demand step up. China has been buying hogs. It's just that our own standbys like Japan and Mexico have actually been lagging as of late. So hopefully we can see them come in and step it up and get some pork bought from us. One other thing that is very interesting is we're seeing a very wide spread between the cutout and the cash price, and maybe as wide as it has ever been, suggesting that the packers are making very good money at these prices. But I think if you get anywhere near the top end of this range in the front month and or take a look at those deferred months, it's probably either a selling or a hedging opportunity for producers. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.